Oh, welcome back to my channel. So today we're going to look at what Jim Cramer is saying about these kind of markets, the volatility, etc. Jim Cramer is the host of Mad Money on CNBC. He's been in the markets for over 40 years and a hedge fund manager as well. So let's see what he's saying.
My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Look, I'm trying to be Jimmy Chill, but I keep seeing people say the dumbest things, and it is beginning to drive me nuts! This morning, it was some analyst talking about how you can track every move in this market by watching the Fed and the money supply. I don't know whether to laugh or cry. Tears of a clown. After Sedate Day, where the Dow edged up 39 points, S&P gained 0.22%, record close. Nasdaq advanced 0.15%, also two-notch a record close. This whole notion of the Fed as Grand Inquisitor is so out of touch with reality, with the trench warfare of the moment. You know what? Makes me want to gag. You don't want to see that. Forget the big picture stuff. There are two things you need to keep track of when you're picking stocks right now: the sector and the company, which includes the people running. You want sectors that are in bull market mode. And while following the Fed can help, it's telling you a small portion of the story. You want to stay away from underperforming groups and battlegrounds and just go with what is working. Bye.
So as he says, there's a bull market somewhere. So with 1.4 billion shares traded each day on the New York Stock Exchange, with some 2,800 companies, and even 4,000 if you include the NASDAQ, there's a lot of companies out there. There's all sorts of them in all sorts of areas. Some are in bull markets, some are in bear markets, and some you really don't want to look at. There may be only 400 shares out of 4,000, 10% that you may want to even look at. So there's something somewhere to buy, as he says. As he mentioned, stop worrying about the Fed. I've been in this market for 40 years, and people have been worrying about the Fed for the last 10. And that's not where you're going to make your money. Listening to people talking about the Fed, speaking for the Fed, interpreting the Fed, every word is looked at. As he says, stop worrying about the Fed for now and concentrate on the fundamentals of your companies that you're looking at and the economy. As he says, it's all about sectors and companies. Which ones are doing well, which ones are not. Buy those in a bull market mode. Stay away from underperforming groups and sectors and go with what is working. So there are stocks like in technology that are doing well, and some in airlines and cruise lines that are not doing well. So you make the decision. Stay with the bull market, stay with those in a bull market mode, and stay away from the underperforming areas. There's always this tug of war between the bulls and the bears, and the markets go up and down, and that's the way it is. But if you look here, the markets are always going up. The markets that we see today may very well be bargains when we look back in 10 years. So with a longer-term view, the markets are usually up. Many people are buying ETFs, exchange-traded funds, which are portfolios with professional managers, or basically index funds in certain areas, sectors, industrials, etc. And they're for growth or income. Professionally managed portfolios are quite prevalent out there. Many people do not have the time or expertise to start picking individual stocks, but they're in the markets anyway with ETFs. You just can't sit around and do nothing and wait for that perfect timing. You have to do something, and ETFs is the way to go. The real question is, are you making money by hesitating, by not being in the market, by listening to doom and gloom people? You have to ask that question, and are you making money? So are you? Because keep in mind, the corporate profits in the United States jumped 9.7% to record highs of $2.4 trillion in the second quarter, and the GDP grew by 6.6% in the second quarter as well. This is public knowledge. Every investment advisor or broker has this information. We have to look at that, and why are we record highs? Well, there's your answer. And if you look at all the job openings in the U.S. currently, there's over 10 million. So that's an indication of a strong economy. So you have to be in the markets if you're going to win. Nobody knows exactly what's going to happen next, but you have to be in the game to make money, which means you have to be in the markets at all times. This is why the markets are going to go higher, simply because of all of these factors. So we'll see going forward what's going to happen to the GDP as well as corporate profits. Hopefully you enjoyed this video and learned something, and I'll see you next time.